Greetings everyone, Joseph James here with your nightly newsletter brought to you by schooloftrade.com. Today was October 14th, 2009. I want to remind you guys about our free resource online, guys. Check out our YouTube page /School of Trade. And when you're there, guys, please subscribe to our YouTube page so that we get all the free videos that pop up every day, and please rate and comment on this video. Now guys, today was a pretty slow day today. We took 3 trades today. Took 1 loss actually, 2 winners. We'll go over that a little bit later on in the video. FOMC minutes today at 2 o'clock. I think that was pretty much what people are waiting for here in the market this morning, but really didn't see much at all across the markets we traded this morning. We did the best we could out of what we were given. We took 120 out of the market today. That's 12 ticks, all out of the crude oil this morning. Of course, 12 ticks on crude, that puts $120 in your pocket. That brings our weekly total to 880, and of course your monthly total to 4,900. Now again, guys, if you would have joined us October 1st, you would have already made back all that money you invested in the advanced course and some. Okay, so keep in mind of that. We're making our way through the month of October. We'll keep you guys posted. Now guys, the term of the day today is divergence. Now one of our members this morning brought that up this morning in the trade room, and I want to make sure I talked a little bit about divergence. It's usually very common. Most people know what divergence is, but basically it's considered a leading indicator, and now we believe it to be an indicator of sentiment. Now I'm going to go into a little bit more about this divergence and how people use it, but I see divergence as being a sentiment indicator. Divergence, what does it mean? It's a drawing apart, right? The lines extending from a center. Now that's kind of the formal definition of what divergence is, a drawing apart. It's a separation, a division, or a variation or a deviation from the mean, from the center. Right? In other words, we see divergence in our trading charts when one thing goes up and the other goes down. Right? And basically what it tells us is that something isn't correct, something's wrong. And we're usually going to look for indicators such as the RSI, stochastic, MACD, and your CCI. Okay, so divergence is when one thing goes up and one thing goes down, right? So it goes in the opposite direction. It diverges from the center. Now there are 2 basic types of divergence. There's regular divergence and there's hidden divergence. Regular divergence is when price makes new highs and the indicator does not. Okay, so the price breaks through the high of the day while the stochastic does not make new highs. Okay, and of course you have hidden divergence, which is when the indicator makes new highs or new lows and price does not. So regular divergence, price makes new highs, but the indicator doesn't follow. Right? One goes in one way, the other goes in the other direction. Then we have hidden divergence, which of course is when the indicator makes the new highs or lows and the price does not. Now, how is it used? Well, to be honest with you guys, I find every single day we have a new guest in our trade room that asks questions like, why aren't we taking divergence patterns today? And of course, I consider divergence patterns to be not consistent enough to use as my entry. Now, call me a picky trader, but I'm a day trader, guys. And my job is to limit my risk and participate in the market in the highest percentage times. So if my job is to find the very best opportunities to trade every day, then divergence patterns are not going to be it. Because there's so many you're going to see every day, they're not consistent enough to use as an entry pattern. Now, it's very easy to see, right, diverge your charts. It happens all the time. We see divergence on our charts 150 times an hour. So how do we know which time to take them and which time not? So again, right, I find the patterns, these divergence setup patterns, to be very inconsistent, and really there's far too many of them every day to really take as an actual setup entry. Now, I use divergence as a sentiment tool for our setups. So of course, if divergence confirms that we should be getting long here, that will of course confirm a breaker long. Right? I'm not going to take the actual divergence pattern as the entry. It would be ludicrous, right? Way too many of those happening every day, and it's virtually unrealistic to ever think a new trader could potentially filter out the bad divergence patterns from the good ones, right? It's virtually impossible. There's way too many. They're not consistent enough. So we don't look for the patterns. We use it as sentiment. And of course, that sentiment tool, it gives us that idea of where the bias is. And of course, if the bias of the sentiment is to the long side because of that divergence telling us, then we know, of course, to look for our long setups. Now, guys, beware out there, right? I find every single day we have a new guest in the room. It almost sounds like educators out there, they love to pass this off as an actual trading system. So be careful out there, guys, right? Divergence trading systems, although there probably are good ones out there, the majority of what I've seen out there, guys, is very low quality, right? Simply calling a divergence setup an entry pattern, right, is not there enough, right? We need a little more than that. We need, of course, an actual entry pattern. We need entry rules. We need some sort of confirmation tool, right? Not just looking for divergence. All right, so be careful about that, guys. Lots of educators out there love to pass this off as a real trading system. It's not. You need to get a little more than that. And of course, if you want to see how we apply divergence to our live trade room and how we implement divergence and this sentiment indicator into our live trading and into our patterns, All right, guys, come out and join us in our live trade room. We opens up on for the European session 2:45 Eastern Time, for the U.S. session 7:45 Eastern Time tomorrow morning. Tomorrow's Thursday, so of course we have free webinars tomorrow, Tuesdays and Thursdays, free webinars at 11:30 a.m. Eastern Time, right there in our live trade room. So come out and join us for that. And as always, guys, if you're coming out tomorrow morning for the first time in our live trade room, grab a copy of the Beginner's Course. The Beginner's Course is going to give you guys that firm foundation to build on as you work your way through the Intermediate and the Advanced course. All right, some of the trades we took today. Now, guys, we waited pretty much all day today for just a couple minutes of action here in the crude. It all happened between 10:45 and 11:15. And guys, this is kind of what we expect to see on a day like today. We didn't have a lot of volume at the open, right? 3 a.m. came and went, no volume there. 9:30 came and went, no volume there either. We saw, of course, our retail sale today, 8:30, no volume came in the market there either. So we were pretty much left to assume that most of the smart money in the market this morning was simply waiting patiently to see what those Fed meeting minutes were going to be at 2 o'clock. Now, of course, when I recorded this video here, we just finished the morning session, so I'm not aware of what that result was for the rest of the morning, for the afternoon here. But we had a good, strong reason to believe, though, those FOMC minutes coming out at 2 o'clock Eastern Time today was probably why people were waiting, right? We expect them to be, of course, talking about important stuff there in these meeting minutes. So, bottom line is, we had to be patient. We had to wait for the volume to come in the market. And when we saw the volume come in, we had to be ready, willing, and able to react. And we did so here. Uncharacteristic, obviously, here. Our first trade, guys, 11:04, was our first trade of the day. We had to wait until 11 a.m. this morning to take our first trade. So, again, a little bit uncharacteristic of what we're used to seeing. But, again, we have to work with what the market gives us. Now, the first trade here was a loss. And this first trade here, 11:04, on the crude, this is a breaker short. Entry here was at 74.59, and of course, I had to take a loss in this one. If you're with us this morning, we learned two very valuable lessons. The first lesson is that a swing low must actually make a swing low. We can't cheat. And on this one, at 61, as you guys can see when I zoom in here, that green horizontal line there, right, that swing low never actually broke below 61. In fact, I told the entire room this morning, be careful of that, and I didn't follow my own rules, right? I didn't follow my own advice. So the first lesson I learned this morning on this loss, again, whenever I take a loss, I want to make sure I learn why I took that loss, right? Nothing's random. Everything has a reason behind it. So if I take a loss, there's a reason for it. And the reason here is that I didn't wait for that break below 61. I took it early. So I tried to predict, I got in early, and it made me pay. Lesson 2 was don't be afraid to cut your losses early and get out of that trade. Right? We had to use that technique on this particular trade. We immediately knew we made the wrong decision. We saw price go right back towards our point of entry, didn't get any real profitability on it, saw price action slow down. We knew we made the mistake right away, and of course we cut our losses as early as possible. So we lost 12 ticks there on that first trade there, 11:04, for our first loss. We haven't taken a loss all week, so of course this is a little bit out of the normal, but the bottom line is we had to keep going. Now, it wasn't on the rafter. I wanted to grab this move. We knew this move was coming, so I was looking for another opportunity to get in. Now, this time, my second trade here, 11:06, about 2 minutes later, this is where we followed our rules. I waited for that swing low and actually really waited to see this thing play out for us here. 11:06, entry was at 74.52. This one, of course, made all that money right back, +4, +8, and then scratch for 16 ticks there on this winner in the crude. So the bottom line, guys, is do not be afraid to cut your losses early. Do not be afraid to admit a mistake and learn from that mistake. And then most importantly, if you make a mistake like that, do not let it affect your next trade. If I would have been scared of taking the next trade here, guys, I wouldn't have made that money back and I'd be sitting here with a loss in the day. But because I had the confidence in my rules, had the confidence the next trade was going to be according to my rules and I could follow those rules with precision, I took the trade with confidence and of course was rewarded for that by getting that second trade there that made all the money back and some, right, from that earlier loss. Now, we weren't done yet there. Had one more trade to take, 11:25 here, all the way to the upper right-hand corner of your monitor there. On the crude again, all three trades here on the crude. This, of course, entry was at 74.89. We took 4 ticks out of the market there for your +8 ticks total, right? Take 2 contracts off at your +4. And guys, you can add all up there. We got lost 12, made back 16, up by 4, then of course up by 8. There's your +12 on the crude. As you can see, it happened all basically within just a couple minutes here on the crude. But guys, that's what it means to be a day trader. Sometimes you got to be willing to wait a little while to get into some of these trades when they show up on your charts. I want to remind you guys also, come out and join us tomorrow morning for our live trade room at 2:45 Eastern Time for the European session, 7:45 Eastern for the US session. We'll do a free webinar tomorrow, Thursday at 11:30 Eastern Time, so make sure you guys are here for that. We'll give you guys a free 3 weeks as part of our trial. The beginner's course is highly recommended for all free trial members. And as always, guys, please rate and comment on this video. My name is Joseph James. Thanks for your time today. For more information about lifetime membership, please contact our sales team. That's sales@schooloftrade.com. As always, guys, We open the room tomorrow morning, 2:45, and then 7:45 Eastern for the U.S. session. We'll see you then. Bye-bye for now.